Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Very good evening, ladies and gentlemen, and welcome to the Smartkarma Weekly Forum. The forum is a high-impact weekly live webinar exclusive for Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the network. It is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. At the end of every week, we take recordings of the forum and upload them to our YouTube channel. This allows you to watch forum recordings at your own time and pace and also share them with friends. We tend to cover large caps, small and mid caps, as well as core thematics. In today's forum, we will look at EVA Precision, which is a very unique and hidden play on the growth of the EV market, not just in the US, but also in Asia. We then take a look at Shimano, which is a Japanese precision manufacturing and bicycle manufacturing company. And lastly, we will talk about China, the outlook post the recent stimulus, as well as issues that remain. Let's kick off with EVA Precision. The ticker is 838 Hong Kong. The market cap is about $400 million, and the stock trades nearly $5 million a day, so it's pretty investable. Samir Taneja is the insight provider who's recently initiated coverage on this name. What does EVA do? EVA is a precision manufacturer. It has historically supplied office and automotive equipment, and it's increasingly getting more interesting as it gets qualified to deliver plastic molds and other equipment for the EV segment. As you know, automotive contracts are very difficult to get. The qualification process can run into many years. Once these contracts come good, the revenues are largely recurring and in place for several years. Based on that, we see the auto division driving growth over the next 5 years, as the EV space begins to grow rapidly. They have signed Tesla as a major client. They have also signed up Great Wall Motors in China, and we think there will be more Chinese clients coming up in very near term. We see steady insider buying, good capital allocation, as well as a 30% payout ratio. This could be a genuine growth stock that is not covered by the street at all at the moment. Moving on to Shimano, 7309 JP, a market cap of close to $16 billion US dollars. And as you can see, the share price has come off quite a long way from its highs of 36,000 yen earlier in the year. Shimano is the largest manufacturer of bicycle components globally. It also sells snowboarding, fishing, and golf products. Second quarter operating profit was in line with expectations, and its EV to EBIT difference versus Ferrari has widened to a 5-year high. This gap is likely to narrow again. The business is modeling a GFC-style collapse in sales and margins. At the moment, the current share price already assumes the worst. This means you have an opportunity to revisit one of the highest qualities, best manufacturers in Japan at very good valuations. Lastly, let's talk about China and stimulus, and this is an insight from Sai Desak. The Chinese government, as we all know, has resorted to aggressive stimulus via infrastructure spending to boost the economy. Reports suggest government's intention to sell over $220 billion worth of special bonds to finance various different projects. The policy is shifting to lower leverage in the financial system to curb shadow banking, has created headwinds pre-2020. There are bank lending limits in real estate and clamp down on tech companies' privileges. All of this has contributed to the difficulties. All in all, we feel it will be very difficult for China to achieve 5.5% growth rate this year due to threats of lockdowns as well as rising propensity to save. This means we have to be rather clever, rather intelligent, and rather smart about what stocks and sectors to look at and own into this year. For all this and more, please head on over to the Smartkarma platform and continue the conversation there. Look forward to speaking to you the week after. Thanks. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.